Hey guys, so something I've been thinking about doing a lot lately is actually a mortgage recast, and a lot of people seem to not even know what a mortgage recast is, and I think for certain people this could be a very powerful tool. So, what is it? Unlike traditional refinance, a recast is simply putting a large payment towards your principal and then having your bank or lender just reamortize the loan at the new rate. So imagine if you owe $300,000 on your mortgage and you make a lump sum payment of $50,000, they'll just take the $50,000 off the principal and then reamortize the loan and lower your monthly principal and interest payment. It really is that simple. And usually there's a fee for this, which is usually around $150, sometimes up to $500. Just kind of depends on your lender. You'd have to check with them. Certainly not all lenders do this. There's restrictions for VA and FHA loans. You would just need to talk to your servicer. But I think for a lot of people, just having the peace of mind of having a lower mortgage payment, a lower principal and interest each month may absolutely help them sleep well at night. And I want to run you guys through my exact numbers and kind of the pros and cons that I personally have been weighing as someone that would like to retire fairly early and who's already just working part time, and kind of how I've taken these things into account in my own personal situation. So for me, I originated my loan about 4 years and 8 months ago, and the original loan balance was $427,000. Right now, I owe about $387,000, and I currently have about $100,000 sitting on the sideline that we'll run this example for. So if I pay that $100,000 and the bank reduces the amount that I owe and reamortizes my loan, keeping the same 25 years and 4 months that I have left, that does not change. It does not extend the life of your loan like a refinance was. It also doesn't have those very, very expensive closing costs that a traditional refinance would have. Certainly depending on the bank, some banks or lenders have lower closing costs than others, but usually they have to do an entire new appraisal and a lot of paperwork for that, whereas this is just one finance guy rerunning your numbers. So for me, currently, my monthly principal and interest is around $1,870. If I were to do this lump sum $100,000 payment and then have them recast my payment, it would actually drop to about $1,387. So that would save me $483, so almost $500 a month. And then over the next 25 years, I would actually save around $47,000 in interest on the loan. And when I personally think about recasting the mortgage, I'm usually thinking about what's my monthly needs and how much inflow do I have and outflow. How much are my assets producing that'll be able to cover my life? And this is where it's actually really counterintuitive when you think about a mortgage recast, because a lot of people that are approaching retirement, talking to their financial advisors, or if you're just a member of a community like the Financial Independence Retire Early community, that a lot of my viewers are, you're usually talking about the 4% rule, which states that, over a usual traditional 30-year retirement, if you withdraw 4% of your assets, even in a historically tragic, the worst period to retire, the day before the worst day that the data has been back tested, you should not run out of money during a traditional 30-year retirement. And then extrapolating on the 4% rule, a lot of people just say multiply your yearly needs by 25. That just gives you the 4%. So that's how much money you're going to need to replace each expense in your life. So recasting my mortgage saves me $500 a month over the course of a year. That's $6,000. Based on the traditional 4% rule, to replace that $6,000 a year, instead of the $100,000 I'm paying towards my mortgage to recast it, I would actually need $150,000 in stocks and bonds, which sounds like it shouldn't even make sense. So I think for the right person, $100,000 recasting their mortgage versus putting that $100,000 in stocks and bonds might be the correct move. I think it really depends on What motivates you as a person? Are you someone that's going to sleep a lot better knowing that you don't owe a bank $500 extra every single month for the next 25 years? Or is your deep down, unrelenting faith in the United States stock market and even the global economy so strong that you believe you're going to outpace it by placing that money into the stock market? Because let's face it, we've had an amazing 10-year run. Like, I don't think coming out of the financial crisis, anybody would have said, hey, we are about to go to the moon. I don't think that was the sentiment at all. It certainly wasn't for me during that period. And for me, honestly, it makes a little less sense than a lot of people because my mortgage rate is only 3.25%. So deep down, I truly believe that the stock market should produce more than 3.25%. And that's all in well and makes perfect sense if I want to die the richest person in the graveyard. Sometimes the goal is not acquiring the most assets. Sometimes the goal should just be peace of mind. And a lot of people fail to mention that once you put a lump sum of money into real estate, that money becomes illiquid. If this $100,000 was in the stock market or in a money market fund and an emergency came up, if I didn't already have an emergency fund, I'm thinking about, the average person on the street. Do you need access to these funds? I think that's an important distinction before you consider something like this. I mean, if you had an inheritance, if you had a bonus at work, if you had extra lump sum incomes to put into this, I think for a lot of people, it might start to make sense. Because if you have a 7% mortgage or even a 6% mortgage, paying down on that principal is a guaranteed return. Now, while the stock market's beat that lately, it doesn't always. And you never know when we're going to have another red year. And for me, I'm in my mid-30s. So staying invested in the stock market probably does make the most sense for me. But I do think back to that math about paying off my mortgage or even recasting the mortgage under certain interest rate scenarios could actually shave off $50,000 from my retirement goal. So I think the closer I get to pulling the plug on traditional employment, it's going to be a harder decision to make. Certainly I'll have paid down more of my principal by then, but it's definitely a compelling thought process to make. If you're a risk adverse person and it's something you hadn't even heard about before, I think it definitely warrants a moment of your time. If you simply Google mortgage recast calculator, there's actually 10 or 12 fantastic recast calculators that'll pop up that you can put your own numbers in and start to play around with. So that's where I'm at. I haven't made a definitive decision to recast my mortgage or pay any lump sums towards my mortgage, but it's something I think about every single month. And I just wanted to run through my real numbers instead of just telling you how to do it with yours. I'll definitely follow up if I do decide to pull the trigger and give you guys an update. But I'm very curious if you faced the same decision. Were you genuinely undecided? Did you opt for a refinance that may have more expensive fees and closing costs? Or did you just keep investing in the stock market? Or just leave it in a money market fund? Opt to keep a larger emergency fund? Or maybe you hadn't even heard of a recast at all, which is surprisingly what I hear from a lot of people. And if you're curious about the follow-up video here in 10 to 12 months, hit that subscribe button. Dropping videos, trying to as often as I can. And thanks for stopping in, guys, and have a great day.